What if the next phase of on-chain finance is not another trading rush, but a quiet upgrade to how markets actually move? What if the projects that win are not the loudest on social media, but the ones wiring traditional assets into programmable rails with institutional-grade trust? What if the most important growth story in crypto is not a meme narrative at all, but a bridge between regulated securities and open networks? Here is the reveal. Ondo is turning tokenization from a slogan into infrastructure that issues, prices, and settles real financial instruments across multiple chains. Because this week, the signals are not about noise. They are about distribution, data integrity, and measurable adoption at the edges of traditional finance. And this is where things take a turn. Exchange-traded funds for the largest networks have normalized institutional exposure to digital assets, while policymakers move slowly toward easier conditions and global liquidity begins to unlock. Capital is rotating with new discipline. Institutions want guardrails, auditable data, compliant access to yield, and blockchains that behave like dependable plumbing. For Ethereum investors, the question is no longer whether real-world assets will come on-chain. The question is, which rails will carry them with integrity and reach? Now here is where it shifts. The winners will be platforms that combine regulatory readiness with developer-friendly design and broad distribution across the ecosystems people already use. Ondo's recent moves aim precisely at that center of gravity. Bridge to the next idea. To see why, we need to name the gap that has stalled tokenization for years. Roll-ups promise scale, but they introduced new complexity that created friction for compliance teams and for end users who just want assets to settle correctly. Stablecoins delivered speed, but they did not natively connect to securities, funds, and corporate actions with the precision that regulated markets require. Early tokenized funds looked elegant in white papers, but custody, price discovery, and multi-chain synchronization made the wiring fragile at the moment of truth. Here's the problem statement. Tokenization needs a platform that speaks to regulators, asset managers, and builders, while reaching millions of users where they already are. But here is where it gets interesting. The barrier is not only technical. It is distribution and trust. If tokenized assets do not reach a wide user base with high-integrity data, they remain a demonstration instead of a market. This one detail changes everything. Distribution determines velocity. Velocity drives adoption. Adoption compounds value. Enter Ondo, a two-layer platform that issues compliant tokenized assets and distributes them across multiple chains at scale. Think of Ondo as two pieces that lock together. First, a suite of tokenized products that mirror traditional instruments such as short-term United States treasuries for qualified purchasers, issued with clear policies and redemption mechanics. Second, a distribution marketplace called Ondo Global Markets that lists tokenized representations of public equities and exchange-traded funds and brings them onto public networks that users actually touch. This might sound technical, but it is simpler than it looks. The product layer ensures that the assets are structured for institutional adoption. The distribution layer ensures that those assets can actually reach users and developers at scale. Together they form a flywheel. Now here is the real unlock. Ondo Global Markets has expanded to BNB Chain, opening access to tokenized stocks, and exchange-traded funds for a massive global user base across regions where retail volume is strong. For Ethereum watchers, that is a tell. The platform is not attempting to win a single chain culture war. It is following distribution and liquidity to wherever users already reside. Distribution without reliable data would still be fragile, which is why another development matters just as much. price accuracy, corporate actions, and cross-chain messaging form the skeletal system of real markets. If a dividend or a stock split is misapplied on-chain, trust breaks and liquidity evaporates. Ondo has named Chainlink as an official provider of price data and corporate actions for its tokenized equities, with cross-chain interoperability aligned to keep information synchronized wherever assets move. Let that sink in. A battle-tested data network in decentralized finance becomes the backbone for a tokenized securities venue that is going multi-chain. That is not a marketing flourish. It is the boring reliability that compliance teams demand and that developers can safely compose around. Now here is the part most people miss. When data integrity rises, the internal cost of saying yes inside institutions falls. And when the cost of saying yes falls, experiments become programs, and programs become systems. That path from pilot to platform is where the smartest capital tends to show up first. Smart money pays less attention to narratives and more attention to working systems with defensible moats. Look at the signals around Ondo. Tokenized treasuries and related products have grown their underlying assets, while total value locked and assets under administration across the Ondo ecosystem have climbed to meaningful scale. Pause there for a second. For a platform focused on real-world adoption, sustained growth in underlying assets says more than a single price candle ever could. It indicates repeat usage and deepening trust. It implies integrations that other teams rely upon for their own products. Across blockchain infrastructure, those are the early markers of institutional adoption. To make this concrete, let us walk through how the technology meets the market. On the issuance side, assets like tokenized short-term treasuries are structured with clear investor categories and redemption mechanics, allowing for policy alignment while preserving the programmability developers expect. On the distribution side, Ondo Global Markets standardizes listings, pricing, and events for tokenized equities so that applications can present familiar objects with on-chain settlement. This might sound technical, but it is simpler than it looks. Traditional finance defines the instrument. The open economy defines how quickly and transparently it moves. By anchoring both sides, Ondo lets builders focus on user experience instead of reinventing compliance each time. And here is where it gets interesting. A multi-chain footprint reduces the friction between discovery and settlement. Users on BNB Chain can discover tokenized assets where they already transact, while custody and redemption can route to the venues and policies that fit the asset. That same pattern can ripple into adjacent sectors that care about dependable rails and predictable cash management. Across Web3 gaming adoption, the ability to settle against tokenized treasuries or index funds can lower treasury management risk for studios and marketplaces that need dependable payouts. Even platforms similar to the immutable XNFT marketplace can benefit when treasuries, rewards, and collateral can reference reliable on-chain instruments during volatile periods. For Ethereum allocators, this matters because it links consumer-scale distribution with institutional-grade settlement. Now here is the part most people miss. The place where a tokenized asset is discovered is not always the place where it is held for the long term. Discovery leads, settlement follows. And the projects that master both can feel inevitable as liquidity deepens. Inevitability, of course, is earned by facing risks head-on. Here is the catch. Tokenization is regulated terrain and onboarding remains gated for certain products, so user education and clear disclosures are essential to maintain trust during growth. Competition is intense, from bank-led networks to other tokenization platforms to Layer 1 ecosystems that are building their own distribution and settlement stacks. There are token-level considerations as well. Governance must align with long-term users, and unlock schedules or emissions must not flood the market in ways that undercut durable adoption. This might sound defensive, but it is strategic realism. Institutional adoption is not a sprint. It is a trust journey that rewards patience and operational maturity. That is why the roadmap and partnership choices deserve attention. Near-term priorities are straightforward. Expand Ondo global markets to where users already are, including high-activity chains with strong developer communities, while deepening listings and improving user experience for retail and professional users alike. Harden the data layer with Chainlink so that every tokenized equity and fund accurately reflects corporate events, prices, and splits, and so that cross-chain movement does not break the audit trail. This is not hype. It is the blocking and tackling of market building that allows compliance teams to greenlight pilots and then scale them across desks. And this is where things take a turn. As data standards harden and custody becomes routine, the friction that once slowed institutional pilots begins to fade. That unlocks the slow, then sudden curve of adoption that has defined every major step change in crypto. When those curves appear, the market often revalues the rails rather than the headlines. For grounded investors seeking asymmetric upside, the most attractive opportunities sit at the intersection of compliant product design, dependable data, and broad distribution. Ondo's expansion to BNB Chain speaks to distribution at scale. The Chainlink integration speaks to consistent data and cross-chain coherence. The steady growth in tokenized product demand and total value locked speaks to real underlying use. If you value deep research like this, subscribe to Crypto Wayfarer. Now here is the real unlock. Once the wiring is in place, new categories begin to look obvious in hindsight. Portfolio managers can rebalance across tokenized funds in minutes with clear settlement. Payment rails can settle against tokenized treasuries with transparency and predictable statements. Consumer applications can display positions, dividends, and splits in a way that is familiar to traditional users, while preserving the advantages of programmability. And builders across on-chain infrastructure can treat tokenized value as a first-class citizen inside their flows. That is why the present week matters more than a single price movement or a chart pattern. Ondo expands into a chain with enormous user reach, widening the top of the funnel for tokenized securities just as appetite returns for safer yield and regulated exposure. Ondo locks in a data and events provider recognized by institutions, easing compliance and accelerating developer confidence with standardized inputs and outputs. Ondo continues to report rising usage across products and markets, pointing to a broadening base rather than a speculative spike that fades next week. Because the strength of this story is not in one catalyst. It is in the compounding effect of many small, durable steps that reduce friction and increase trust. Not hype. Not theory. Not speculation. But measurable progress that is hard to reverse once it takes hold. Let us connect this to the wider competitive map so you can position it clearly. Ethereum remains the center of composability and developer mindshare, especially for sophisticated decentralized finance and for the next wave of Layer 2 innovation. Solana offers exceptional consumer performance with fast finality and rising momentum in consumer finance and entertainment experiences. Polygon and Arbitrum continue to push the frontier on scaling and partnerships, each with distinctive approaches to cost, throughput, and enterprise outreach. Ondo is not trying to replace those ecosystems. It is trying to serve them. By standardizing tokenized securities across multiple chains, Ondo acts as a neutral service layer that other builders can lean on without reinventing compliance and data pipelines. For Ethereum 2025 clientele, that is strategic. For chains that prioritize retail scale, it is pragmatic. For institutions, it is a way in that feels familiar and auditable. A way in is what this cycle is truly about. The first decade of crypto built alternative markets. The second decade is about connection. Connection from broker screens to block explorers. From custody vaults to on-chain wallets. From traditional instruments to programmable settlement. Across Web3 gaming adoption and consumer-scale applications, these connections will feel invisible when they work and unbearable when they do not. Now here's the part most people miss. The invisible layers are where most of the value hides. Because whoever controls the reliable paths for assets and data controls the pace of adoption. And that is the territory where Ondo is quietly staking its claim with product plus distribution. From here, we extract the investor lens. Is this platform solving a concrete problem for a real buyer who needs this to work? Can it survive policy shifts, yield changes, and market stress without breaking user trust? Can it create network effects that do not depend on a single chain or a single narrative? Ondo's answer is to be the trustworthy rail for tokenized assets wherever users already are, backed by institutional-grade partners for data, events, and cross-chain movement. Across blockchain infrastructure, that is the right stance for institutional adoption in 2025. This might sound technical, but it is simpler than it looks. Trust first. Distribution second. Composability always. Picture the year ahead for Ethereum and for the broader open economy. Exchange-traded funds continue to channel passive flows, while tokenization channels active flows into assets that used to sit behind brokerage walls. Developers call live corporate actions into applications without brittle workarounds, and users redeem or settle with clarity across chains when policies allow. Consumer platforms, including NFT venues with treasury needs, treat tokenized securities side by side with digital collectibles and stablecoins when designing payouts and reserves. When that picture is normal, the conversation shifts from coins to rails. Rails that move value with accountability across jurisdictions. Because once those rails exist, growth can look nonlinear. It looks slow, then sudden, then obvious in hindsight. The projects that prepared for that moment will not need to pivot. They will already be running. If you value deep research like this, subscribe to Crypto Wayfarer. Because we are not chasing noise. Stay sharp. Stay strategic. And keep wayfaring.